Welcome everyone, happy Friday. We're going to get right into the stock market technical analysis. There's lots of things going on, so we need to stay on point. So leave me a thumbs up, guys, if you find value, and let's get right into it. All right, we're going to start out with triple Qs today. We'll go through some stock indices, some individual stock trades. I'll go through some of the trades I've talked about recently, and then we'll cover gold and wrap up. Triple Qs selling down. The 200-day moving average is right here on triple Q is about 365.47. We're cleanly through that, so I'm not exactly sure how much we're going to rally, but we are hitting that support. We're getting close to that support, about 352 area. Good support there. You can see, we had lots of reactions back here, and we had a reaction here, and we're right there. They're stepping in a little bit early, so I could easily see us bouncing here. Again, the market's not going to just plunge. All right, it's not going to go straight down. The Fed is trying to walk the market down, and the Fed comes out next week on Wednesday to report. So basically, we need to probably get through that Fed meeting and see what happens. I think the Fed's probably likely to come out and continue to hike rates, but then talk bullish, talk dovish, I guess, and try to keep the market from completely collapsing. They want to walk the market down, and so that means that we could rally here. All right? So in general, I think it makes sense to probably lighten up or maybe cover some positions in the short term. Longer term, we're going much lower, and I firmly believe that. The charts tell me that we've broken trend. It's now sell the rip, right? So you're going to move down, and then you'll rally, and then we look to reshort into rallies, all right? That's SPY. Another reason why I think we are likely to kind of hold up here and potentially rally a little bit. The SPY is right at the 200-day moving average, 442. You can see it's right there, and we're slightly above it. So this is an area where I'd expect we're at least going to hold in this area. Most likely, we're not going to break the 200-day moving average until after the Fed comes out. So we could grind around and rally a little bit before the Fed next week. All right, that's all I see there on that one. And IWM, small caps clearly broke the range. We're breaking down here, and again, with the Fed coming out, and just, these will kind of do what the large caps do. So we could rally here and maybe rally up to this 205 area, and that's likely the objective area to reshort. So I'm kind of looking for that, maybe a little bit of a bounce, and then we'll continue lower. So longer term, I think we're going lower, but just in the short term, we might bounce here. And let's look at some of these stocks like Amazon. So Amazon, big things going on with this one. On the weekly chart with Amazon, we've got an uptrend line here going back to 2008. So this is your bull market in Amazon over the last 12 years or so, or 14 years actually. And you can see on the weekly chart, we're breaking that and actually getting a sell signal. So if we close anywhere down around here, we've got a big sell signal on Amazon, which tells me that we're likely going to go much lower, and we're just starting to move lower on Amazon. Some weekly targets, this was your former resistance area on the weekly chart, so that would probably be the support, is about 2036, and that's going to be a move from where we're at right now of about 30% drop. And that would be consistent with a bear market as well, most likely in the indices. On the daily chart with Amazon, we're basically right there at support. Let me show you that. So this big range, this is the range Amazon's been in for over a year, and support's right there at 29.29 basically. And you can see as I zoom in, we're just pretty much holding right at that support area. So I suspect we're going to hold here and probably wait for the Fed before actually breaking, but it's still going to mean that we've got a sell signal on the weekly chart. So maybe we rally into the Fed meeting and then continue the sell-off. Altogether, I'm still looking for lower prices over the longer term. Okay, some of these trade ideas. AVGO hitting support, our next profit target right there at 546.40. So again, you can see that was clear support here. I'm expecting a bounce here. Whether we undercut it a little bit, I'm still expecting it not to be very meaningful, and we're probably going to bounce here. So I did cover this trade And I'll probably cycle back in if we bounce up to 592.86 as the next level of resistance. Again, we entered the trade way up here at this key resistance level, 674, and that's a trade of about 19%. So pretty good drop so far. It's likely due for a bounce. C's, I'm still short C's. We did hit support, so the first level support 57.81, but I'm looking for that to break and trade down to our next level of support at 46.50, about 46.50. So I'm just sticking with this one. It's likely going to just grind around until after the Fed, and then we'll probably break. This IYR is at support here, which is about 105.40, and the 200-day moving average. We could bounce here, but ultimately I'm holding short on this one as well, looking for a move down to the next level of support, which is about 101.75. I don't see any indication whether we bounce here. I don't see any indication why we're not going to continue lower. And Ford, I covered this trade, covered my short position. Again, I talked about this when we took the short right here at 25.19 for a trade right down to 20.80 for a profit of about 17% in just a matter of 3 or 4 days. And again, when I talked about entering the trade, I thought we were going to trade down to the channel. This is where I was going to cover, and now let it do what it's going to do, and then likely reshort it when we break the trend line. And if we don't break the trend line, then we're done with the trade. Ultimately, we've got a good gain out of this. The trade's worked out very nicely in a short period of time. We'll look for continuation to the downside, but for right now, I'm covering my short position and taking profit. Okay, LLY, I still like this as a short trade. We've got some near-term support right here at about 239.86. We need to see that break, and the 200 days right there as well. We're probably going to run down, hit that 200-day, chop around, and then break here in the future. So I still like it short. Again, on the daily chart, we had an uptrend line right here. We have big negative divergence that's been building for quite a while. So it tells me that we're going to continue to break down. And we broke our trend right here. So there's your sell signal. Really came on January 14th. We're just kind of consolidating, and I think we will head lower. So I still like it. I'm targeting this 218.96 as the next level of support. Okay, gold. Let me clean this chart up. Gold bullion is at support, basically. So if you look at the this trend line right here, this horizontal support line, 1833. So that was former resistance. We had 1, 2, 3 false breakout there, 4, 5 tags of that, and we broke above it again. So here's the breakout, and we are back testing that support right there. So I'm expecting this to hold and to rally. To me, if you look at the hourly chart, it looks like we're bull flagging. So as you can zoom in here, you've got the flagpole, kind of the impulsive launch, and then you've got kind of this flagging action, and then I'm looking for a break like that. Likely not going to happen till the Fed. We'll probably just chop around here for the next couple days and then break after the Fed. But I'm looking for that 1833 to hold. And again, if gold does rally here, it's probably consistent with the Fed coming out and talking dovish after their meeting. They've already taken some steam out of the markets. The tech sector and the SPY are off quite a bit from the highs. So they probably feel like they can buy themselves, they can kind of talk a little dovish and, keep the market up a little bit. Again, they're trying to walk the market down. They don't want the markets to crash. So that would be consistent. If gold rallies here, it would be consistent with the Fed coming out and being a little bit easier than originally expected. And I'm kind of leaning that way, at least in the near term. And guys, that's really all I have for right now. I did a live stream yesterday and covered a whole bunch of things. So go back and watch that one if you haven't watched it already. And that's kind of talking about the longer term charts. And I will catch you guys on Monday. Bye.